Hey guys, in today's video I want to talk about what I wish I knew before I started trading. This is something you guys have been requesting for a very long time, and I decided that it was a good time to make this video right now because it made me think about a lot of stuff in the past when I started my trading journey, and I just want to share it with you guys. So first of all, what I wish I knew in the beginning is I wanted to learn how to be patient. That is one of the biggest mistakes I did when I started trading. I was not patient enough. I didn't wait for the trading setups. I was just forcing trades all day long. I tried to take as many trades as I could in one day. Um, the thing though, in the beginning, since I had some experience when I traded stocks, and I used to trade fundamental analysis, as you probably know by now, guys. Technical analysis was something I started off later with, because I read books by Warren Buffett, Benjamin Graham. Um, One of the books were The Intelligent Investors, really good book. I recommend it. However, in those books they talk bad about technical analysis basically, and when you look up to people who are like Warren Buffett, when you look up to Benjamin Graham, it's hard to go over to technical analysis, right? um, and I have always been someone who only listens to someone who has already done it, meaning if I cannot find someone that I wanted to look up to when it came to technical analysis, I would never pursue uh, that path, so to say, because I always want to make sure that there's someone I can learn from, as have a mentor or some sort, someone I can learn from, and then implement their skills into the markets and then develop my own. For example, that's how I started out. Now, I started with trading fundamental analysis, which means you really have to be patient. So it's pretty funny that when I started trading technical analysis, I just forgot that big aspect that I had with me when it came to long term investments. And when I traded stocks, even to this day, when I do long term investings, I never lose. Okay. Because I think one of the reasons is, of course, the not only that I know what I'm doing, but because I'm patient. I can hold stocks for 3 to 5 years without bothering. I don't look at my stocks every single day because I know that I need to be patient with them. I need to let the companies grow, and that in turn will grow my investments. Okay? But when it comes to technical analysis and when you're trading as a scalper, intraday trader, especially Forex, it's a whole another ball game. So that's one of the things I really wish I knew when I started trading Forex and technical analysis, and that was, of course, to be patient. Do not chase trades. Do not, take multiple setups a day. That's just stupid. Quality over quantity. But yeah, that's something that I really wish I knew in the beginning, and it is one of the key factors to become successful when it comes to scalping and becoming a good technical analysis trader. Okay, and that is basically taking the same from a fundamental analysis perspective, and that is to be patient. Next is find a good mentor. Okay, if you are preparing to invest $1,000, $10,000, $100,000 into something that you think you can learn by googling or without having any kind of chart time or any experience, you're fooling yourself. Okay, it's the same as you starting a business without knowing anything about businesses, how to run, how to make papers, how to make how to create invoices, how to set up businesses, how to get shares in markets, so on and so forth. So if you don't know those key principles to starting a profitable business or becoming a profitable trader, you're gonna waste your time and you're gonna waste your money. Okay, one of the best things you can learn to do in life if you want to become successful no matter what is find the right people, meaning find the people who have already accomplished or are accomplishing what you are trying to accomplish, and then try to replicate what they are doing. You always have to find your own style in life. That's how it is, and it comes the same to trading. You always have to make sure that you adapt all the skills to your personality, meaning what kind of personality do you have? Are you a very patient person? Are you very eager in nature. I'm very eager in nature. That could be one of the reasons I struggled so much with patience. I know I have students who don't struggle with patience at all. It's one of the easiest things they have to handle in their trading, for example. But for me, it's much harder. And also, it's just one of those things. So it's important that you find a good mentor, someone who can guide you. Now, you don't have to pick any mentor on the internet or something like that. You can always go to a bank, ask if they have floor traders, ask if you can talk to one of them. Try to make contacts like that and start talking with people who are doing what you want to do. Okay? Try to make connections, try to introduce yourself as professional as possible, and just try to learn that way. Monitor your actual chart time. Now, there's a rule in life that is called the 10,000 hours rules. I don't know if you guys know about that. Bruce Lee always used to talk about it. If you guys like Bruce Lee, I think he's one of my idols. And he said that he practiced, a punch or a kick for at least 10,000 hours. Okay, and that in general, if you practice 12 hours a day the same kick, it's going to take you around 2.5 years to master that kick. If you spend 12 hours every single day monitoring chart time, trading, learning, trying to become better every single day for at least 12 hours a day, it's going to take you 2.5 years to reach 10,000 hours. Okay? Working 12 hours a day is very intense, first of all, and then having to have the patience to wait 2.5 years to feel that breakthrough, people don't want to do that. And here's the thing with success, guys. If you really want something really, really bad, you're not going to be affected by the time it's going to take to reach it, okay? Because all you're going to think about is, I'm going to reach it. That's the most important. But if you're into things for a quick fix in your life, or you want this quick fix, you want quick money, blah, 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 what you're trying to do is the wrong thing, okay? You will never get quick money, get rich quick. There's nothing like that in life, The only thing you can do is either you can gamble, right? You can buy lottery tickets, you can become criminal, but all those three have a very rough consequence, right? So those are the three things you can do to get rich quick, okay? The other things, when it comes to investments, when it comes to trading, when it comes to, even if you become the best trader in the world, it's still going to take time to build a 7-figure account, for example, okay? And it's going to take time to really, really learn all the market cycles. The market cycles consist of 4 cycles. If you have read my book, you're going to know about them. Those 4 market cycles are going to be different throughout the year, okay? And those are one of the key things you need to master as a technical analysis, because you want to develop the gut feeling of the market. And by knowing the market cycles and by identifying what cycle the market is in, while you're looking at the chart, is going to help you tremendously. So that's one of the things why you want to put as much chart time as possible and actually monitor how many hours did I spend today actually trying to learn. Not only sitting and looking and then going on YouTube and then going back to your chart and then going on YouTube. Not like that. Actually trading, making analysis, backtesting, actual chart time. That's what I'm talking about. Next up is, don't take risk management for granted. That's one thing I did. I didn't really respect risk management when I started trading Forex because of the leverage. Okay, the leverage got me really excited, which I think it makes everyone excited in the beginning. And I mean, I did have really, really great trades, but I also had really bad trades because of the leverage. Because when you had when you had winners, they were really, really big. When you had losers, they were also really, really big. So one of the things when I look back is, don't take risk management for granted. If I could go back in time, the first thing I would start with was to be patient, risk management, and monitor your actual chart time. Okay, those are the 3 things. Because if you do not take risk management seriously, you're never going to become profitable, because it's going to be a circle that is not going to take you anywhere. You're just going to run around in the same place. You're going to win trades, you're going to lose as much. You're going to win, you're going to lose as much if you don't have proper risk management. So that's super important. Next up, Don't follow the media, don't follow the hype. I mean, look at cryptocurrency right now. We had a phase right now, the past 2 months, where cryptocurrency was everywhere, right? Everyone was jumping on cryptocurrency. People made 10 grand in like 30 seconds. People made 100 grand in 20 seconds. You know, it was crazy. The hype was crazy. 80% of those people lost almost everything, okay? Because everything that goes up has to come down and vice versa. That's also one of the things in the market cycles. If you don't understand the fundamentals of how the market works, how businesses work, you're never going to end up becoming profitable because you don't have the education or the proper education for it. If you follow the media, that means that you do not know how to make a decision. Okay, you need other people to help you make that decision. And that means that you're uneducated. Okay, if you are educated, you're not going to listen to the media. You're going to look at the media like, okay, what are these people doing? Okay, and what should I do? Okay, you never want to follow the media because they are there to hype everything up because they have already bought the shares. For example, if Wall Street tells you, oh my god, Apple is going to crash tomorrow, okay, that's why they want you to sell the stock so they can dump it. Okay, and vice versa. If you say, oh, buy Apple, that's because they bought Apple 2 years ago. They're holding shares, you know, way below the market price that the price is right now, and they want to hype up the price. That's how the market works, and that's what the media does. Okay, and if you haven't understood that already, you really need to educate yourself. Okay, because I think you're still stuck in that quick fix money mentality. That's why you haven't figured that out yet. So do not follow the media. Next up, having a good trading strategy does not mean you will make money. 100% true. I had best strategy when I started out trading. Nothing wrong with the strategy whatsoever. What was wrong was the risk management, basically the hype behind everything, and I wasn't patient. My strategy was on point, okay, but the other three were lacking, and that made me be inconsistent, okay? But by having a good trading strategy, it doesn't mean that you will make money. Okay, just remember that because you need to have everything in Zen basically. You need to have all the key principles running. If they're not running, you're not going to end up being profitable. It's not only about the trading strategy, but it's about the mentality behind how you act towards your trading strategy. That's what's going to make you become a profitable trader. So even if you have the best trading strategy, but you lack the risk management, you lack the patience, and you don't have a lot of chart time, it's not going to help you. Next up, always be a student to the markets. Even to this day, guys, I practice every single day. I still backtest. I try to develop new strategies, pinpoint my entries, become better, try to trade with smaller risk, creating higher profits. I'm trying to improve everything step by step, minor details. Okay, why? Because the more I improve, the more rewarded I will be, and the more value I will be to others, right? The more I learn, the more I can teach, the more value I can give a company, the more value I can give investors, and in turn, I will become better, okay? And that will make me grow as a person. But if I'm not a student and think I know it all, okay, I will never continue developing because I will be stuck. And I'm a person who has made great businesses in life, not only when it comes to investments, but other kind of businesses. And one of the key things why I always became successful was because I was always a student. And every time I sold a business or I made a lot of money, I tried to improve myself as much as possible and not think, okay, I'm the big man. I have everything I want. I'm going to do whatever I want. No, I was always humbling myself and trying to improve every single day. Okay, every single minute, reading books, trying to become better, talking to people, trying to get mentored, you know, everything, and using the money to invest it, always investing, never spending. That is also one of the key things. When you start making money, guys, don't look at all these Instagram profiles, you know, buying cars left and right, blah, 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 blah. Make sure that you invest your money because life life is really weird sometimes because you're going to have great moments where you're going to make a lot of money, and then you're going to have really bad moments when you're not going to make a single dime, okay? Could be you could get sick. It could happen something, or it could be bad things that can happen in your life that you're not ready or prepared for, that can really take you down mentally. Okay? And if you haven't invested during the up phase in your life when everything went good and really secured your future, you will not be able to go through that phase when it gets really, really hard. Okay? That's why the mentality behind people today that when you make money you should become a baller, that's not the way you should do. All right, remember, listen to Warren Buffett, listen to Bill Gates. I mean, those guys make billions of dollars, but look at what they're spending their money on. You don't see them buy the newest car every single day or the newest house or anything like that, because they respect their money. And that's something you guys have to learn. You have to respect the position you are in, but you also have to have deep respect to your money. Okay, this is something that I learned from a very young age. I've never had problem with that because I've never had money in the beginning. Okay, and thanks to that, going through everything in life, going through the phases, I learned to respect money so much that when I started making a lot of money, I knew how to use it the proper way. Okay, and I want you guys also to take something away from that. So always be a student to the markets or whatever you do in life. Never settle. Okay, always improve, no matter what. Next is backtest your strategy before taking it live with real money. Make sure that you really backtest your strategy, guys. Just make sure that at least have 1 year of a track record of the strategy that you're trying to implement live with real money, and just see if it's profitable. Okay, if you're trading the daily bullish engulfing candle at a support and you see, okay, uh, during 1 year I had a 80% success rate trading this strategy, and maybe I should improve or increase the stop loss by 2 pips extra, because during this 1 year I noticed that GBP JPY like to have some bigger liquidity grabs, creating bigger wicks. So I need to increase the stop loss, for example. Just monitor those small details with the pair you're going to implement the strategy on. Just make sure that it's profitable, okay? At least above 50% win rate with the 1 to 2 risk reward, you're good to go, okay? But just backtest it before you take it live. Don't take someone's word and just implement it live with real money. And then you end up losing, and then you end up hating trading, but you did it for the completely wrong um, or the wrong way that you're supposed to do it. So it's not the trading that sucks, it's you doing the wrong thing, okay? Next up, evolve with the markets and learn the market cycles. Like I talked about there in the beginning, you need chart time, and with chart time you will evolve with the markets, because you will be able to learn, develop a sense of gut feeling, that you will develop this you will know when the media is talking, how the market is going to react to that. For example, we had the gold rush thanks to Trump. And if you have noticed, if you look at press conference with Trump when he talks, or if you watch when he talks on TV, if he takes up that he's going to increase money given to cancer research, for example, all you have to do is you got to look up companies that do work with cancer research, and you're going to see right away when he said that the market is going to start going bullish, or the stocks. Why? Because he just said in a press conference he's going to increase the money that is going to be given to cancer research companies, right? And when he says that, all you have to do is buy those stocks. It's just as simple as that. But you will never learn that without evolving with the markets and learning the market cycles, because you will develop this with experience and with a good mentor who's going to talk about this stuff. But it's important that you always evolve with the market, so you will be able to learn how to implement different key areas that happens outside of the markets and implement them. Learning the market cycle so you can implement it, okay? Here also, there's a lot about time frame misconception. When I started, for example, I used to believe that the lower time frames provided more trading setups and in turn giving more money. This was holding true for me for the first 6 months. I don't know really why it was that case, but it went really well, just scalping the lower time frames in and out, in and out, in and out all day. But after those 6 months, when the market cycle, keep in mind now, when the market cycle shifted, it stopped working, and that pissed me off because I was like, why? You know, why is the market behaving like this? Why can't it just be moving the way it did before? And when I started noticing it, I had to go back testing, developing other strategies, trying to find an edge. Okay? But the misconception is that the lower time frames provide more trading setups and in turn giving more money. This is so far away from true. Okay? Next up, high time frames were only used uh, okay, so high time frames were only used to swing trade. Basically, I thought that high time frames were only for people who were swing trading, and for intraday or scalpers, it was not supposed to be used. And this is also a far away from the truth. As you guys know, I talk a lot about top-down analysis and why it's so important. And thanks to higher time frames, I'm more successful than ever. And I'm still a scalp trader and an intraday trader. So never believe that high time frames are only used for swing trade or for higher long-term trading, blah, 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 blah. No, it's not. Next up, lower time frames have higher win rate. Again, very bad thing to believe in. Lower time frames do not have a higher win rate. It's the opposite. Higher time frame have the highest win rate. Lower time frame have the lowest. But if you combine the good with the higher time frame and the good with the lower time frame, you're gonna have a perfect match. Okay, meaning you use lower time frames for entries, higher time frames for identifying your setups. That's it. That's all you need to do. And then higher time frames are boring. This is still true though. I mean, it's a misconception, but sometimes high time frames can be boring. That's because if you're waiting for a daily candle to close and it will close in 7 hours, it's better to just do something else instead of sitting and waiting those 7 hours. I used to sit and wait because I wanted to see each time frame develop. I used to sit 18 hours a day watching the chart just develop in front of me, looking at each time frame, just going through everything. Okay, the daily is going to close in 7 hours. What is the 4 hour doing? Okay, it's going bullish. What is the 15 minute? Okay, why is the 15 minute moving bearish but the 4 hours looking bullish? What's the thing? What can I find here? Okay, if I make a zone here, okay, now I see, okay, the 15 minute is rejecting that zone. Now it's going bullish again. Okay, good. So now they are in confluence. That's how I came up with all these confluence strategies and blah, 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 just by looking at the charts, understanding that, man, the market is moving in a certain way all the time. It's like a language, okay? And the more I started looking at the charts, the more I noticed these key things that always appear, like the V pattern, for example. If you look at your chart, you're gonna see the V pattern appearing every time there's gonna be a trend reversal. Every single time, it's gonna create a V pattern. Okay? Hope this video helps, guys. Take care.